I'm going to ask you investors a question. You get to decide. Do you want to start your doomsday clock just a bit earlier? At least according to the Nobel Prize-winning economist Paul Krugman, you should. When asked over the weekend at the World Government Summit in Dubai whether investors should expect to see a recession in the coming months, not the coming year, Krugman replied, quote, "I think that there is a quite good chance that we will have a recession late this year or next year." I said, let's discuss this here. We bring in former UBS of America CEO and Fox Business contributor Robert Wolf, along with Axios Markets editor Dion Rabouin. Good to see both of you.
Hey, good to be here.
Great to be here.
Robert Wolf, Paul Krugman, he's been wrong, he's been right, he's been wrong, he's been right. Is he right or wrong on this recession call?
He's wrong, but it's not surprising that an economist would go bold one way or the other. When I was at Salomon Brothers in the 80s, Henry Kaufman made one great call, and it saved him for the 30 years as an economist. This is what economists do. They go bold. But there is no recession. His comparison to 2008, I was there at the Lehman weekend in 2008. This is nothing like it. The leverage in the system is way down. It's just totally different time.
Dion, what do you say? Paul Krugman, who writes for the New York Times, is a Pulitzer Prize-winning economist, says recession possibly as late as this year.
Yeah, and it's not an out there completely idea, right? I remember I was at a conference a couple of years ago, this is actually 3 years ago in 2016, where folks were calling for a recession in 2020 all the way back then. This 2020 recession consensus call has really been building for a while, and Krugman's just kind of moving it up a little bit.
What's the evidence, though?
Well, you've got a bunch of bad stuff baked into the system. You've got a bunch of bad loans, that credit quality is declining. You have a bunch of these triple-B credits that are being extended to a lot more folks. So there's a lot of bad debt on the books. You're also seeing the global economy turn lower. You're seeing, as he pointed out in the article, central banks kind of out of bullets. The ECB, BOJ have been spending all this money stimulating their economy, and the economy's not getting stimulated. So as global growth turns down, you could see the U.S. turn with it.
I mean, there's a big difference between slowdown in global growth and a recession.
This is true.
We're running right now at around 2.5%, 3%. And I don't see that turning the other way in the second half of the year. What I think really is our biggest concern should be, one, is the Fed going to stay with somewhere between 0 and 2 raises, or are they going to do another head fake? And number two, where we're going to be with respect to the China trade deal.
Do you see the Fed getting us, Robert, into some type of quagmire by not raising rates?
No. Listen, I think they made a mistake on QE3. That we used to speak about, quantitative easing, and I think they made a mistake on their 9th hike in December. And now I think that they need to stay the course and see what happens. They should do nothing in March, but I would not be surprised if they at least do, something this year. But I actually think, I used to think there were going to be 4 hikes. Now I think it's between 0 and 2.
Dion, the U.S. seems to be hurtling toward another government shutdown. How would that play into this at all? Because the first one certainly, we haven't, we're waiting till February 28th, I believe, to get the GDP number we didn't get, the first print for Q1. But there isn't a lot of concern that it dinged it too badly.
Well, we're also still waiting on a number of other data releases. We're not even going to get the retail sales report that we were supposed to get back in January. We're also not getting a number of other data, and other data has been pushed back to later this month that we were supposed to get in December. So we're missing a lot of data on how the economy recovered or how the economy performed during the shutdown. So we really don't know the extent of the impact that it had. It could certainly do a lot more damage in terms of hurting folks' faith and in terms of, business executives saying, you know what, this market is crazy. I can't make any long-term plans. Let's put everything on pause until something works itself out.
Now you touched a nerve with me, and here's why. As far back as these surveys go, decades ago, you would ask business leaders and they would say, with all this uncertainty, I can't spend. There's always uncertainty, Robert. So what are they talking about? And then you've got the Amazons of the world. You've got all the Warby Parkers, all these companies that started businesses during recessions and said, whatever, let's just go for it.
I mean, I would agree with you. It's crazy to say that we need to have complete uncertainty in the system.
You'll never have it.
We're never going to have that. I do think, though, that what goes on in Washington definitely impacts spending. But we're not going to see anything with taxes this year. If anything, maybe we'll see some infrastructure.
You worried about a housing market that's slowing down?
Well, I think that's the reason Paul Krugman cannot be totally ignored. Housing feels like it's getting worse. Auto sector feels like it's getting worse.
Well, Dion
but there's not leverage in the
Yeah.
system. That's what the big difference is. So you're not going to see banks get disrupted like they did in 2008.
Dion, as we finish up, Robert said these economists have to go big or go home, and so they get one great call and they're known forever for that. What if it's a bad call? You know, he had a bad call saying that the markets would implode if Donald Trump were elected, and that has not happened.
Yeah, that's really worked against him. And look, I would have to push back on what Robert's saying a little bit when he says there's no leverage built in the system. There's a lot of leverage. It's just not on bank balance sheets this time. And so the banks are in a lot better place than they are. But a lot of those fund managers, a lot of folks who just have money in these fund managers, they've got a lot of debt built in there and a lot of leverage. And so that's still in the system. There still is some danger there. So I don't think we're completely out of the woods, but I do agree with you. Paul Krugman maybe just going a bit further out there on the ledge, trying to get some headlines, and it seems like it worked.
Fund managers being in trouble and having a lack of performance does not cause a recession. What causes a recession is the amount of money in the system gets strapped. When banks get strapped, that causes a recession. When the Fed gets strapped, that causes a recession. We don't have a recession when there's market moves one way or the other.
There is one area where banks and market participants are getting strapped, and that's in China. Not here right now. We'll be watching it. Thank you so much. A nice, feisty discussion. Robert Wolf and Dion Rabouin, thank you.